let's get started. Let's see what's going on. So, gonna get into today's price action. Didn't take a trade because my model wasn't there, and to be honest, I was most definitely looking for a setup, but I managed to stop myself from getting into the market, bring myself back to my model, and ensure that I didn't place any trades that shouldn't really be placing. So today was kind of more of a tape reading whilst I was at work rather than a trade. So just going to do a quick review. I was mainly looking at the Nasdaq, although S&P did have some SMT going on during the London session. So let's just zoom out. 4-hour chart. We've bounced off this order block here, pulled back, and we're continuing down at the moment. And I want to say that is because in line with the monthly candle, or the monthly candles, we still have this fair value gap marked out here. So I would not be surprised if going into September we come down to fill this. Right. To start, it's not so much here. It was a bit of a accumulation in the London session. I was looking more at the S&P. Telltale sign here really is the displacement down right at the end of the London session. We've got yesterday's PM lows, got this imbalance here, which we're now filling, coming in just after the US lunch hour, so it's now 1:15, and similar sort of thing happening here. This line here is the previous 4-hour candle high after 10 o'clock. So that was my target draw / the London highs that I was looking at. So let's go 5-minute chart here. So at 9:45 we swept yesterday's PM session low, and then on the S&P it wasn't quite a sweep. Actually, yeah, it was. We already swept that at 9 o'clock, and then came down to do that even more. I was kind of looking around here. Just zoom in a little bit. As you can see, it's a lot of choppy business on the Nasdaq. So I was initially looking at like this inverse here to then see a move up, and the price just kept going in between that and then drop down again, push up, trade back down, and then here we got the SMT, which I was looking at. So this signaled the bullish move once the Nasdaq had done the same, and this was right on cue at 10 o'clock. Look at this push up, beautiful. Ideally the entry should have been around here, but I was conscious of this inverse here. So yeah, either way it's not my model. So yeah, we could have secured a nice bit of profit if I had gotten in on time, but I was hesitating a little bit, and I did want to see price come back down to that 1-minute fair value gap marked out there before going into my initial lineup. Was entry here, stop below this candle body, and then target the 4-hour high. So once we had 10 o'clock, as you can see on the 4-hour, we came below the candle and then wicked up, swept the other side of it, and that would have been the trade done. Bang, lovely. So ultimately, I was just continuously looking at this, like, do I go in now? Do I go in now? And I think that hesitation really is one of the reasons why I didn't get in. As you can see, that would have been pretty nice to come up here. If move that risk toward there, would have been a 1.45, but if I got in around here when I was looking at it, it would have been like So it's for the same risk to reward, you know what I mean, 2.1 for that, but not the case. Once you swept that 4-hour high, price is still bearish at the moment. I do believe that we are going lower for the rest of the week. You can see it's just sort of come up and down there. I've not really been paying as much attention once that happened. I was watching it for a bit to see the retracement. And then, yeah, this would be the point where everyone that went long gets stopped out. You get the reaction back up and then the displacement down. Get into short here. Stop above this candle. Target previous daily low. I would anticipate that we go in to take that in the PM session. Wouldn't be surprised just because it's the daily draw. Taking a 4-hour draw. And yeah, ultimately there is just more downside to go for. Like this, all of this here. I do think what's going to happen is we'll see. See if I can get like a. Where is it? An arrow. Path. Yeah, so I think we'll see something like this. That's in black now. Sweep that. Tap. Come back up. Down like that. Something like that. And then once we get that, then we'll see further move, possibly, dependent on if we continue down here. Bear in mind, this is a long way down. Something like this. Bit of accumulation within the fair value gap. One more sweep, like that. And then back up again into this zone here. So, you know, it's a longer term play, starting to build a better picture of the market, because the last few days I've not really been 100% sure what it wants to do. But after watching today, I feel like this is going to be the case, whether this plays out over the next week or the next 2 weeks. Maybe over the next month or so we could see this happen. So this would be, you know, start of September, coming into the end of September, you get the final move down, and then going into October, we get that move up into the green month. As I've mentioned before, September is quite commonly a bearish month. So yeah, similar sort of picture with the S&P as well. We've got all of this here that we can tap into. If we zoom out a little bit more, is that on the monthly? Yeah, so there you go. I think the Nasdaq paints this the best at the moment. I don't think we'll come this far down into this inverse. I would like to see. So if we think about the model here, we got sweep, inverse, breaker structure, fair value gap above the breaker structure. Look to enter long there, target high here. If you were to play it like that, that's a very long-term trade. You'd only get like a, what would you get? So this is definitely a longer video today. Actually diving into this here. So if you were to, I don't think the risk to reward would actually be that great. I think if you were to do it on a higher time frame, you'd want to go from maybe like the bottom of this candle just above the inverse. So if we imagine this is the inverse here, like so, you can still it's a 1-to-1. Do you know what I mean? So the higher time frame isn't as rewarding, but you've got more conviction with the higher time frame because the price moves on the higher time frame. That's where the institutions are trading. But yeah, so there was also a few bits of news today as well, and then there was a surprise news around 10:45, and that's what. No, was it? It was about 10. I think it was around 10:40, and that's what sent price back up again, just in time. And ultimately, yeah, no trade for me today. So not going to be trading tomorrow. I've got a very busy day at work, and I am not looking to be distracted. simply because it's a big piece of work that I've got to do. And that'll be me for the week. If we just do a quick, let's do a quick weekly review, since I'll be going out tomorrow night with work as well. History for the week, for the month, let's go current week. Current week down £4.44, and that was the trade I took on Tuesday. So very, very minimal loss. Ultimately still up about 140 something on the month. So look, on the month we are 148 in profit. So still nice, just above 2% on the month. And then Monday, UK bank holiday as well. And Friday I'll be traveling through most of the weekend, so I won't be trading next Friday. So yeah, there may be a couple opportunities left in the month. We'll see around Tuesday, Wednesday, Thursday next week. But I'm still debating whether or not I'm going to take some time off in September whilst I'm away. Just completely reset, get out of the market for a bit, secure some profits, and then come back. Just avoid all the bearish action in September. And yeah, I think that's going to do me for today, and I'll see you next week.